Good morning. It is October the 31st. We are finishing up 2020. Pretty smooth. My name is Dan Allen. This is our weekly Q&A on the I-Quadrant side of our project. I will be your co-host. Your actual host is a business partner of mine, Mr. Tito Avila. Are you there, sir?
Yes, sir. Yes, sir.
You have the co-host. You can take the screen share. The show is yours.
Thank you so much. Let me just get my windows arranged here. I got them all a little bit spread out.
And I shall be handling the letting people in part.
Oh, wonderful. Okay, cool. That definitely helps. All right. All right, we're going to go ahead and share here. Let me see. Okay. That looks right. Cool. All right. All right. Good morning, everybody. Welcome to Saturday Q&A. Interesting week in life and in the markets. Yeah. How's everything with you, Mr. Allen?
Amazing. I don't take a day off from being amazing. So whatever's going on in the external, it's allowed to rain or shine. I have no control over that. Both scenarios, I make sure I'm amazing.
That's right. 100%. That's the ticket right there to success, for real. So if you have a question for today's Q&A, please either type it in the chat or go ahead and unmute yourself or raise your hand. Just getting the screen organized here. Got a few people on today.
Yes, sir.
Okay. It's been a very in the markets, it's been a very interesting week, especially with the study that I'm doing over here on my end, and very excited about things to come.
That's an interesting pair that you got up. It's one of those pairs that have absolutely nothing to do with the U.S. dollar.
That's right.
As people are talking about the elections and how everything is affected from that perspective, to be able to choose not to participate in a country's whatever it is a pretty fun proposition from being a currency trader.
That is true. That is true, actually. Not a lot of people talk about that, but at the moment, I mean, I think that in general, even residually, you're going to see some kind of effect on the markets when the U.S. dollar moves in certain ways, just because it's inevitable, being that it is kind of the king currency, right? Similar to how, Bitcoin will move the entire cryptocurrency market if it goes one way or another. But definitely it's buffered significantly. If you're trading pairs that are non-USD pairs, it's buffered significantly, and you'll be able to manage let's say the volatility a little bit better if you're operating outside of those US currency pairs at a time like this. It's so much uncertainty, an election month, week, and so on. Very interesting times all around, man. It's like I can't I can't stress that enough. It's fascinating to witness everything that's going on. So what do we got? We got any questions, market concerns, things people want to look at? This is your time. Galaxy A21. I don't know if you unmuted yourself or if you just came in like that. You got a question, feel free to ask. Beautiful cold day out here in the mountains. We went from, it was over 80 degrees 2 days ago. Now we're at freezing. So that's the world right now.
Hey Tito, good morning. How are you?
Good morning, Tori. How's everything?
Good. Can you go into the bearish bullish? Can you talk a little bit about that?
Okay, so as far as like what it means or what it
The
looks like,
Yeah, what it looks like.
what it looks like. Okay. All right, so we can just use this chart right here. Um, right now, we're on the 1 hour time interval, right, on Euro NZD. And looking at this chart, you can see at the moment here, we're zoomed out enough that we can see several days, a little over a week actually. And you can see how sentiment, right? Because bullish and bearish, those are describers of sentiment. Sentiment is a very important word in these markets. You can see how the sentiment has shifted, right? It's pretty clear, it's pretty obvious. You can see how here we're coming up, it kind of consolidates here, and then it keeps coming up. So the sentiment, when you see price going up in any situation, means it's bullish. The sentiment is bullish. Here we see a reversal take place where the sentiment shifts, right? You see, you go from seeing a lot of green to seeing a lot of red. The sentiment now became bearish. When that happens, the way that it's described traditionally in these markets is the bulls are in control or the bears are in control. Okay, and all that means is that the bulls are making price go up, the bears are making price go down. Uh, Mr. Allen, if you have something to add to
No,
that,
no, no,
it's
no,
very
no. Please, hey,
straightforward, very simple.
no, sir.
Yeah, very simple. Um, we can look at that, and that applies to any time interval, right? So just because you're seeing that happen on the hourly within a week's time or a few days or whatever, doesn't mean it's going to reflect the exact same way on the daily. Okay, so this is why the top-down analysis is so important, because when you do your top-down analysis, like for example, you're starting on the weekly, then you're going to notice sentiment possibly in a different way than what it'll look like on the hourly. Okay. So you got to assess. You might see on the weekly, you might see that you're in the middle of bullish sentiment, come down to the daily, may still be bullish. And then you get to the 4 hour, now it's looking bearish. Okay. Because like we mentioned last week, the markets are fractal. And what that means is you'll see a lot of the same things happen again and again as you zoom in on smaller and smaller scales. And similarly, kind of like let's use using a scientific comparison, the quantum versus the physical. Okay, the physical being everything here that we can touch and test tangibly, versus the quantum, which is you zoom in on the closest possible scale that you can onto a particle. You'll notice that the results of testing both are a little bit different. The quantum reacts a little differently than the physical. And so how that compares here is the sentiment that you might hear, let's say on the weekly, okay, in this particular case where you can see in these weeks, there was strong bullish sentiment, you might zoom in here into this time or where this bullish sentiment was and find a whole other world of sentiments that are up and down. And so that's important to take into account, right? The higher the time interval, the more that those candles and that sentiment that those candles carry matter, the more weight they carry. Okay, so we don't want to ever just focus on these higher time frames or just focus on the lower time frames. We want to take, capture the entire picture. We want the big picture so that we can use that knowledge or that data of all that sentiment to then make our educated prediction of what is going to happen next and hopefully make some money. Does that make sense?
Yes, it does. I have another question. Okay,
Go ahead.
looking at the candlesticks, just looking at how the bodies feel and then their half field, how do you know, or how can you tell the switch is getting ready to happen? So like I see the green, one of the greens is full, but then it jumped right into a red.
Okay, so can you specify exactly which one you're looking at here, and we'll use it as an example? You're talking about
Okay.
here up at this reversal right here.
Yes.
Okay. So your question is, how do we know if this, when it's going to flip, when it's going to reverse?
Correct.
Okay. So there's a few things at play here, right? One of the things you'll hear Coach Max talk about, well, two things that are key to this question. The first one is market structure, okay? And all that means is, let's see here, because there's you're going to see an infinite amount of examples of this in the markets. Market structure simply means where is your support and where is your resistance. You're familiar with the term support and resistance, right?
Yes.
Okay. So identifying where areas of support and resistance are is important. So I'm going to just take simple line. So right here we have resistance, right? Right here we have support, right? So knowing that that's there and knowing that the historical data of where these areas of support and resistance are, when price gets there again in the future, those areas will be tested. And the question is always, will it break through these points, these key levels, or will it reject? In other words, bounce off of it and come back the other way it came, reverse, right? The process of top-down analysis that we do and the method that Coach Max teaches right down to 20 pips and dip all revolves around using your assessment to figure out whether or not it is going to continue or reverse at these levels. Okay, that's where the money is at. Now, market structure is simply that, identifying key levels and using the education that we receive in the back office, as well as the guidance from Coach Max, Coach Ryan, you know, the 3 R's, retest, rejection, react, and also the candles, the knowledge in the candles, just like Coach Max says, the money is in the candles. When you learn how to read your candlesticks, when you get into that candlestick trading Bible, you're going to notice that there are certain candlestick patterns when they happen at a key level, it's a significant sign of a possible shift in the baseline, let's call it. Okay. That could be in the form of a reversal. So I'm going to give you a perfect example right here. So one of those crucial candlestick patterns is the engulfing, right? The engulfing just means that the candle did the opposite of what the one before it did, and it engulfed the whole thing. So in this particular case, you can see how this bearish candle, right, the red one, engulfed the one before it. It completely covered it. And after that, we saw a major drop in price, okay? So what we're doing here is we're just gathering data. We're gathering what we call confluences. Confluences just means data that is all pointing in the same direction. Data that is all telling me the same thing in different ways.
Okay. Okay.
We want to gather as many of those as possible. So understanding key levels, market structure, understanding candlesticks. And there are more advanced levels of this as well. So this now touches on something else that I spoke on, I believe it was last week, which is continuation patterns and reversal patterns, okay? In this particular case, we're seeing a reversal pattern that is one of the classic ones, okay? And right here is where it's at, okay? So this is a head and shoulders pattern, right here. Yes. So I got a few things going on. I got this key level of resistance. I got this bearish engulfing candle, and I've also got this head and shoulders pattern. Those are 3 crucial confluences that are telling me that there is a very, very good chance that by this right shoulder is done being formed, that we're going to see a drop.
You know, do me a favor.
Nothing is ever one. Yes.
But switch it over from a candle chart to a line chart.
Okay.
You can see head and shoulders clearer on a line chart.
That's right.
So
That's
the
right.
14 inch hair I have.
Got you. I see it. Thank you.
No, the 14 inch hair is black.
So is that what you would call a higher high?
Well, what happens is if you put it back to the line chart,
Yep.
you have price coming from the right and it made the left shoulder. That's a higher high than the one before. And then it dips down and make that next peak down valley. That's a higher low. Then when it goes back up to make the head, it makes a higher high again. Then it goes back down. And if you look now, that next little peak is lower than the last valley. So that was now a lower high, a lower low than the one to the left. Then when you see it go up again, now it's making a lower high than the. But if you look at the actual structure, the top part is actually the head in the middle. That's the name of it. And then you have the right shoulder and then the left shoulder that makes the shape. So this is a pattern that's very popular in the trading world. It's called a head and shoulders pattern, and it's a heavy sign that price is about to reverse. But if you're looking at it from a higher high and lower low, from the head to the left shoulder, you have a higher high, and then from the head to the right shoulder, you have a lower high. So the market structure is also changed from that perspective as well.
I was trying to type it out here. I don't know.
I know. I seen you flowing.
I don't know why the tech's not cooperating today. I'm not gonna mess with it too much.
Now do me a favor. Take it back to the candle, but make it a minute chart.
A mini chart?
Minutes.
Minute. Got it. Yeah. So what, like 5 minutes?
No, the 1 minute.
1 minute. Okay. Any particular section?
Yeah, go just at the beginning of any hour, right? So you can go all the way to the end of the day. Go to 1600, so we don't got to look for it hard.
Yeah.
And so, Toy, one of the things, do you watch any reality TV shows, Toy? Have you ever watched any?
No.
Okay. Well, let's say the Love and Hip Hop, right? So Love and Hip Hop, you watching what's going on, and there's always some drama. Somebody don't like somebody, and a whole lot of stuff always happening, right?
Yeah.
A whole lot of shenanigans. So, and you don't have to take part in the shenanigans. You can just sit and watch. So when you get a chance to, what you're trying to get to do with the price right now, you can sit back and watch the shenanigans between the bulls and the bears. Okay.
Okay.
So each candle, make it a little fatter for me. Perfect. So right at 1600, if you can make a box around from 1600, the first 5 candles. Yeah, rectangle.
Now 1600, you talking about in the time down at the bottom? Okay.
Yes. So we're about to so that's 4 p.m. That's 4 p.m. Tito's time, right? And if you start looking at what's happening from 4 p.m. 1600 to 1605, that's what I wanted to take a little block to help you cover the whole thing for me, though, Tito.
1605, right?
Yeah, that's perfect. Right there. Perfect. So now make that bigger. So the way I look at the chart, Toy, is that I'm watching a reality TV show. Is the Bulls versus the Bears, and each one of these candles individually is a story being told. Okay. So now each candle it creates like a 3D printer, right? Mm-hmm. And so each one of these candles, because I'm on a minute chart, is 60 seconds of information. Okay. Mm-hmm. So that first one is a green one we're going to look at. It started off, then it kind of went up, and at some point it dropped down. That's how it got that tail. Then it came back up, right? So so I see the bulls are trying to push the market up. Then the next candle, next 60 seconds, you see that the bears said, oh, no, you don't. They came right in and started pushing it back down. Then the bulls started to push it back up. That's why I got a wick but then it pushed back down because it's a red candle. So a red candle means that it finished at the bottom right of the body. Okay.
Yeah. Mm-hmm.
And a green candle means that it finished at the top right of the body.
Yeah.
Right. So then now when the third candle starts to develop, because it's already at the bottom right there, it's already starting at the bottom of the body, the bears kept on going. Right. They try to push it up a little with the bulls. Then the bears pulled it back down. Then that one finished up. And then the next candle is like the price didn't really go anywhere. It was kind of up and down. And the bulls started to pull up a little bit. And then now, if you go back, the next candle, the bears pulled it right back down again. And the reason why we highlighted the 1400 is because those 5 candles, right? That drama that I'm describing, if you go up to the 5-minute candle, 5-minute chart now, Tito, please. We're going to find that same drama. And all of it was just in one candle on the 5-minute chart, though. So if you're on a 5-minute chart and you're watching that one candle develop, it actually was all the drama that happened on the 1-minute chart. And that's part of what we're talking about, that the market is fractal because it's made up of pieces of each other. So as I'm on the 5-minute chart, looking at that one candle, the red one, going through whatever its process is going to be, it really is the makeup of the 5 candles that happen on the 1-minute chart. Does that make sense?
Yes. Yes, it does. Thank you so much.
So I'm always
That's
watching
right.
reality TV with the Bears and the Bulls. Go ahead, Tito. I'm sorry.
So on the higher time,
You breaking up, friend?
let's say, right? You just think about all of the stories, all of the information that is inside of that that monthly candle.
Okay.
I can't hear you, Tito. I know it's deep too. Yeah, when it get good, seem like something I always want to just make it a little bit harder.
His screen was frozen as well.
No, he gone. Yeah, he gone.
Yeah.
He out of here. So, does anybody else got it? First, Toy, was that a little bit clear?
Joy.
Anybody else got a question so we can keep dancing? I got the showdown. So y'all stuck with me.
So, I've been, Mr. Allen, I've been trading, for a little bit of time now. And, but I just learned where it came from, the term bearish and bullish.
Okay.
And I've been saying it, and I know, it's going up if it's bullish. I know it's going down if it's bearish, but somebody said the terminology came from the way that both animals attack. So
no, it's absolutely. The term come from it's early stock market stuff. That's funny. It's just a detail. A bear, his claws go down, so that's the mindset of that. A bull's his horns go up, but it's more of the participants in the market, right? So there's a couple different participants, right? There's some people that need to buy something. It's called a utilitarian use. So you can say Walmart, right? Walmart or Microsoft. They're selling something over in Japan. They got to go, before they go switch the product, they got to switch the money in order to get paid, or however it's going to go, who buying what from who. And so that participant is putting money in the market because they need to make a transaction happen. And they send their money to a bank. And the bank has what's called a dealing desk. So if you ever seen the movie Wall Street or things like that, a boiler room, those are what's looked at as dealing. The TV show on Showtime called Black Monday, those are all called dealing desks, right? Where people are making transactions on behalf of their customers. So that's part of what's happening in the market, right? Then you have institutions that speculate, or what we call bet, if you will, or wager on the direction that the market is going to go. So those are institutional speculators, okay? Then you have what we call retail speculators, which are us, right? People that are unsophisticated or they don't have to report what they're doing to the committee of traders on the regulated side of the Forex market, because we have a regulated side and a deregulated side, right? So this is some of that information you study when you want to, like, you don't need it to follow the traders on the live trade session. You don't need it to trade the trading signals, but you might want to kind of get it to just go in the market, right? So among the retail traders, and another name for the retail traders, it's called the crowd, right? Or dumb money. And all of us are in the crowd, and all of us are dumb money. We just want to be smart dumb money. So the crowd is made up of two different well, really three, right? One are the people that we call the bears. So it's not just it's not just the claw or the fact that the chart go down. It's people that are betting, that have a bias that they're betting down, right? And that's all they bet is down. They want the price to go down, and they're waiting for another opportunity for price to go down to get back in the trade. Then when you say the bulls, that's a group of people that's in the market that want the price to go up, right? Then you have us. We don't care. We just want activity, right? And then, Phil, from the bulls and the bears, there are people that actually trade only one time frame. So they're waiting on the 4 hour for something to happen on the 4 hour, and then they making their decision on the 4 hour, either bullish or bearish. So bullish or bearish is the direction of the market. A bull or a bear is the person with the bias. Now, when you see somebody like us that's going from a top-down analysis, we hanging in different people's playgrounds, right? So we jump in the 4 hour for a minute to see where price has stopped and started, but there's some people that only trade the 4 hour, right? Then we go jump down to the 1 hour, hang with those gentlemen and ladies for a second, and start finding out whatever information we want to find out from them. So as we're trading through multiple time frames or looking through multiple time frames, we're becoming smarter dumb money. You won't ever not be dumb money until you can get institutional data and other things that go with that. But through our process of trading, we're evolving from a bull or a bear. We're leaving the crowd, if you will, and we're walking into a place where we're smart dumb money. Welcome back, Tito.
Thank you, sir. Thank you, sir. Yeah, I had a little bit of a flub there, but next week I'm going to implement that idea that you had. That should help out with any little issues like that.
Every champion got to go through the
I was
process.
just saying that I really, no doubt. I like the comparison of these candles to a story, and it really is very much a language. The same way, we write stories with our ABCs. That candlestick trading Bible, that's your ABCs, to understand exactly what each candle means and stands for. And that way, when you're reading the story, you can get a good idea about what is probably going to happen. In general, right, the stories that we read and that we see on movie screens, they're usually the same story over and over again, right? They're generally, you're watching the hero's journey, and the same kind of twists and turns happen, just with different details and different characters. If you learn how to read this alphabet, let's call it, you're going to notice over time that it's basically the same story over and over and over again. All you're doing is trying to pinpoint where the twists and turns are going to be, and ultimately be ahead of the curve in that regard. So, patterns like this, these head and shoulders, that's a reversal pattern. Last week we spoke about the double top and the double bottom. There's all different types of patterns like that you can use as a confluence, in addition to learning exactly what it is that the candles individually are speaking to you about these stories. So I hope that helps, Toy, in your question about how we know when something's going to happen. We never know 100%. Nothing is absolute in these markets, and that's what makes them interesting. But we can make really solid, educated conclusions about what is probably going to happen versus improbably going to happen.
Yes, it most definitely did help me. Thank you so much, Dan and Tito. I appreciate it.
Tito, on that head and shoulders on the right side, right there at your purple support and resistance line, that doji, right?
Mm-hmm.
So thank you. So right there, if I'm watching the story, I see the head and shoulders look like it's making, right? And so right now, if you either set an alert or you happen to be there, but if you look at the chart and you're at that moment in time, to the left is telling you what's the story that's been developing, which is the look like a head and shoulders pattern. We drew the support line and we got this doji growing. And so now it's all this drama, right? Because it could turn back around and go up. It could be a form of consolidation. Or if it break through the line, good mugga, because it's a head and shoulders pattern. Right. And so it's also getting in the trade after the market tells you something, and stand out the trade if you're not clear what the market is saying to you. So as we watch that, if I'm in the market and this is a 4-hour chart, so this I'm thinking about, I'm now going to a lower time frame as I'm looking at this too. And and when that 4-hour chart finishes up, I'm saying if this joint break, and then we get to go play, right?
That's right.
But if you look a little bit to the left, where the head is coming down to make that valley, right there, where you got those multiple dojis, I'm not in the market at all. I'm not that interested in being all the drama. I just want to watch and see what happens. So exactly right. You want to let the market talk to you, which is why I'm calling it a show. And so now the Candlestick Bible toy is going to help you specifically understand what each candle could be saying, not definitely is saying every time.
Okay, got you. I had a quick question. So is this, because right now what I'm seeing is the M. Is that M that what's her name? Max talk about, Coach Max, the M and W?
Yes.
That's good to watch out for.
Yes.
They're in the same family. They're in the same family. So like that M that you're talking about, if you look here, okay. Like we said, the market is fractal. So the more you zoom in, the more you're going to see this stuff repeating itself over and over. Well, we zoomed in from the daily to the 4-hour, and now we got, all of a sudden we saw something new here. This is the double top. You could call it the M. You can call it the opposite of this would be the double bottom or the W. And that's inside of the head and shoulders. And this is what we're talking about. You're going to see stuff inside of, inside of everything. And this is one case where basically this confluence of this double top or this M is confirming the confluence that is the head and shoulders that is in process, right? So you see this head forming and coming down here. You're going to want to keep an eye on this over time to see what it is that's ultimately going to happen. And like Mr. Allen said, me personally, what I would do at this point, well, number one, you could make money just off of this one on its own, right? So I would personally be, doing my top-down analysis and coming in and zooming in more and seeing what else is going on here. But just to keep it simple, I could just do this. And what I would personally do, just like I set this line here at this key support level, I would put one right here as well, right? And set an alert so that I can know when that's going to drop. And my rule of thumb is however high it went above this key support level, or if it's a W in the opposite direction, whatever distance that is, right, on the open close, that I'm going to bank on if it sets off that alert and does a clean break on that support. That's what I'm going to bank on. So that those 60 pips up, I'm going to count on it doing 60 pips down. A lot of times it'll do more, just like you see here. This is 120 pips, but that's a pretty fair bet. Okay. Same thing here, right? We're on a high time frame, so it's a lot of pips, but just so you understand the way that these markets tend to move, right here at this zone, I'm going to set an alert just to see if this head and shoulders will complete. Sometimes they don't. Sometimes the head and shoulders will grow multiple shoulders over and over again until it's ready. In this particular case, it completed the standard cycle. So I'm going to see, what do we got up here? It's 240 some pips, right? So I'm going to count that's probably going to do the same thing in the other direction if we get a clean break on that key support level.
Got you. Understand. Thank
What do we
you.
got? I mean, we came all the way down to 460, 480 pips. So I hope that makes sense. These are important confluences to answer your question and to try to have a solid idea on where price is going to go, when it's going to reverse, when it's going to continue through these key levels.
Thank you so much.
Absolutely.
Anybody else?
This is
Yeah.
Yolanda. Can he go over that one more time?
Yeah.
Hold on.
Go ahead.
It's recorded, Yolanda. So instead of doing the same training twice during one call, I'm gonna hope you'll check out the recording, because he did a super thorough job with it. You can just watch it over and over and over again, and that way we won't use up the little bit of time we have in real estate to do the same thing twice.
Yeah,
Okay.
I do want to touch on one thing here. I do want to touch on one thing that I didn't actually get there though. And that is that you're going to notice here, we're talking about these candlesticks. You're going to notice that in this area here and in this area here, you started getting some of these dojis and longer wicks on smaller bodies and whatnot. This is like Mr. Allen was saying. This is the drama, right? A lot of times when I'm doing back testing or analyzing stuff like this, in Spanish, I would call this a novela, which is basically like what he was saying, like a soap opera, right? And you get to see all of that play out. And it's interesting to note that it would be happening at these key levels. You kind of see it here as well, okay? So here in this particular case, exactly what I was talking about, sometimes it can grow another shoulder. In this particular case, you saw that the bulls were pushing up. They were wanting to bring the price up. Sometimes they will win. Sometimes they will win enough to come all the way back up here, and then they'll start losing again. And that's why the shoulders tend to, sometimes they multiply, okay? But yeah, in general, it's just a matter of paying attention to what these patterns are. Read your candlestick trading Bible, get familiar with the language.
Tito, can you do me a favor?
Yep.
Take away the rectangle at the double top and put it at the drama you was just describing in the middle at the bottom, right there.
Right here?
Yes. And then walk that drama down the different time frames with the 1 hour, the 15 and the 5, and tell me what you see. And that's the beautiful part about marking the chart up as well, because it should stay as you go to the different time frames. So you know what it looked like on the 4 hour. That's the same exact drama on the 1 hour.
Yeah.
It looked totally different, because it looked like the bulls, it looked like they got down to that bottom, then they made a tweezer bottom, and then the bulls started running. Then the bear said, nah, 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 nah. Then they got down to the support, and the bulls said, let's get it. Then they ran to a consolidation. Take it down to the 15, the same spot.
Let's see here. Dang.
Exactly.
Where did this thing go?
Oh, that's why marking the chart up is so important.
Yep. All right.
Now that's that same drama on the 15-minute chart. And this is back to the markets of fractal. Same drama.
Right.
With a bunch of dojis and a graveyard doji coming over there. A bunch of wicks all crazy. That green one with the heavy wick at the bottom, that would have irritated me years ago.
This green one right here?
No, up to the middle, where up to the right, up to the right, up to the right, up to the right. That one.
Okay.
Like all that rejection, right? That big wick looked like that the market wanted to push up, like the bulls was ready to go. 15 minutes later, 45 minutes later, you got another green doji with the wick going the other way, and then you got a party. And can you finish this up on the 5 minute? Because that's where I do a lot of my my watching of the show. So the Bulls and the Bears could be a football game. It could be a basketball game. Two teams you like. For me, is a fight in the schoolyard in 7th grade, just sitting back watching. We call them the good old days for me. And you get to just, again, you can cheer for one side or the other if you want to take a bias. But if you've done your top-down analysis, the market has given you a bias by the time you get down here. And now you're just waiting for that bias to play out.
That's right. That's right. And you can see all types of patterns in here as well. Continuation, reversal patterns, right? Up here, you got this double, triple top, actually.
Mm-hmm.
1, 2, 3, right? Head and shoulders. Came down here. Yep. It's all there. It's all there.
The beautiful thing is how your the support line, or well, the major support resistance line you drew at the beginning of it, how it's looked, the way it's respected by price, kind of on both sides all the way through.
That's right. All the way down to the small intervals.
Mm-hmm.
That's right. And another thing that I'm seeing as we zoom in on this is, into the more intermediate stuff, the fib levels, the Fibonacci levels, on how that plays into being able to, have an idea on what the pattern's going to do once the Bears or the Bulls have established a clear direction. That's for another day. Are there any other questions? We're here at the 11:40 mark Eastern time. I would say we have time maybe for one more quick question, and we'll go ahead and wrap it up.
Yes, sir.
Anybody else?
Tito, can you tell me how to get a black background like you have there? Because mine is not black.
Yeah, all you got to do is you right click on the settings, you right click, and you, where did it go? Right click on settings. And then you're supposed to get something popping up. It's kind of acting up today. I don't know what's going on here. Alternatively, you can go up here all the way to the right, and you click on this little thing called chart properties. Okay. Again, I don't know what's going on with mine. I was trying to type text earlier and it was acting up. It's never done this.
Do me a favor, Tito. Let me add a screen.
Yeah, go ahead.
So right here, where he's showing you, you click the wheel, and you go to appearance, and you take it from whatever color it is to black. Then you have to go to the grid, make it black. Then you have to go to the other grid and make it black. And then you have a black screen.
That's right.
Right here, then appearance, then these three all need you to, because you can have a black background and you can make these lines as well. So those three things affect your appearance.
Thank you, sir.
Absolutely.
Things that you can to get familiar with that, because it's going to play into your trading style directly. And, whatever your preferences are going to, become, let's say, pivotal in your trading style, whatever that may be for you. So the way that I have my chart set up is specific to my style. The way that Mr. Allen has his set up is specific to his. So it is good, and it's important, I would say, when you're getting started, to get really familiar and kind of play with those different settings.
Mr. Ramis, you want to promote what's happening for the rest of the day, sir?
It will be my honor and distinct pleasure. Absolutely. First and foremost, guys, we are at noontime We will have our opportunity blitz, which starts at 12. We'll have 2 more today and 3 tomorrow. So, you know, we do a blitz every Saturday and Sunday, 12 o'clock, 5 o'clock, 9 o'clock Eastern Standard Time. And if I can, I'm going to actually give you guys the Zoom information. I'm going to pull that up, the actual meeting ID for that Zoom at 12, 5, and again at 9 p.m. Eastern. So you have opportunity to load it up with your guests and prospects and build your business on the backs of the presenters, right? We're doing the work and you can get the muscle. That is Zoom ID number 777-434-6287. That's every day, Monday through Friday at 12 and 9. And today, 12 o'clock, 5 o'clock, and 9 p.m. Eastern. Okay, that's today and tomorrow. Opportunity Blitz. We also have a corporate training from Mexico, right? And so, what's that word again, Tito? The drama is in Mexico right now.
La novela.
Okay.
La novela.
All right, guys. So the drama's happening. All the ambassadors are in Mexico, and the corporate staff will be hosting a training at 1 p.m. Eastern. That's, of course, at opportunity.epictrading.com, the official company website, Zoom, for the training. So again, opportunity.epictrading.com, 1 p.m. Eastern for the corporate training today. And then, of course, you guys already know tomorrow night at 8 p.m. Eastern, we will have our Builders Academy for those who want to build the residual income side and all the principles and disciplines and great tools that you'll be able to use and insight you'll be able to get from that call every week as well. That is on our normal call, the Zoom, the one you're on right now, right? At 8 p.m. Eastern, Builders Academy, Sundays, every Sunday, 8 o'clock on this specific Zoom ID. Again, I always say it, but I can't emphasize it enough. We appreciate you, Tito and Dan, so much because you bring so much more value to this amazing system that we already have, building a bridge. Again, so many people who are joining us may get confused on the big stage and the big platforms, a lot of moving parts, but we want to build that bridge to make sure that nobody gets left behind. So I appreciate you guys for all that you do. I'll turn it back over to you.
My pleasure. Thank you, sir. Yes, I would say that for me, one of the biggest, let's say, inspirations for wanting to work directly with people on my team, and appreciating opportunities like this one that you, Mr. Rambis and Mr. Allen, have given me to contribute to, doing more of a, let's say, intimate group setting like this, is that there is so much incredible information that this company has to offer and that the Dream Team has to offer. And at the same time, that's the macro, having that micro opportunity to really be able to dig in on a more personal level and working, more directly with people. That to me is something that I feel is not only nice to have, but crucial to the growth process. So it's absolutely my pleasure. I'm a student here as well. I'm learning a lot. So, I appreciate you, Mr. Rambis, and thank you, Mr. Allen, for the opportunity to continue learning as well. And thank you all for being here. If you have any more questions, any other things that you want to get into, drop them in the GEP chat, and we will continue from there. In the meantime, everybody have a wonderful weekend, and we'll see you again next week. God bless.